Day 95 out of 118. 23 days to go. Yeah, 23 days to go. Not bad. On my run this morning, I was thinking back to the checklist I was making yesterday, and I realized that that is the key to my success in accounting. First, let's do some push-ups. 61. 3 things. Checklist, check your work, and analysis. So you use checklists if you have some steps to do, a sequence of tasks, or just generally a list of things to get done. It's helpful because one, it prevents mistakes. Instead of you trying to memorize these steps and work on what you're working on, you can just direct all your attention and focus to that task. Second, it prevents you from missing something. So if you remember in math, when you were working on a big formula and you made a mistake kind of at the beginning or in the middle, everything after that is wrong. So this helps you to make sure each step gets done. And third, kind of the big one here, is that it gives you the bird's eye view of the sequence or just all the steps. It puts it on the same plane, so you're able to pick out what would be the bottleneck, what requires your attention for you to bring some efficiency. Also brings out, what would be the priority. If there's too much to do and not enough time to do it, what's the 1 or 2 things that need to be done on this checklist to keep the ball moving forward. Now, my last class in my undergrad was auditing, and my takeaway from that was that there is no value in you checking your own work. That was a misunderstanding. You checking your own work doesn't count as support, I think is what they were trying to get across to me. But checking your work has immense value. You're kind of the gatekeeper to what you produce. You have a perspective that your boss or somebody else reviewing your work won't have. All the entries, if there were manually entered numbers and stuff, you want to check those a foot down and a foot across to make sure everything ticks and ties and matches the supporting document or whatever you're using. But definitely check your work. The final thing is analysis. So that involves getting a trend of the work that you're working on, whether it's from month to month or quarter to quarter, or even year to year. Have an idea of what you're expecting each period. And then if there's an outlier or something looks off, to dig in and define why. So as you look at the variances, if it's something that you can explain, great. If it's something that you can't explain or can't find the answer, that's when it's time to sound the alarm and get some help. So this isn't just beneficial for the negative variances. It's also good when you find something like increased revenue. That's something you want to dig into to figure out if you can duplicate whatever's causing that variance or that outlier. So that's it, a list of things that have helped me in the past. Guess she was done.